Hey, good morning, everyone. It's Friday morning here. It's 8:15. I just want to show you kind of what we're looking at on the short-term structure of these charts, because as we know, nothing goes in a straight line forever, even though it feels like it, as corn has just been absolutely pummeled. We had the big down day yesterday where we broke $6 on the July contract, and so what we're seeing here is a setup where we should and probably will get a little bit of a consolidation or a small bounce, and then this setup is calling for lower prices. So if we are able, this is the 240-minute chart right here. Let me make it a little bit bigger so you can see it. What we are looking for is a little bit of a bounce, maybe as high as 85 to 90 up in here, kind of 2/3 the way up this level right here. And at that point, maybe we could find a spot to resell it. I don't know if that'll happen today. It might happen Monday or Tuesday. And then I think we'd be met with additional selling early to mid next week, and that could just roll over today and continue this move over. But what we're seeing in some of the other, in soybeans and wheat, is telling us that we probably want to wait and be patient here to chase corn. So let me show you what I'm talking about on those charts. ZSEN 23. Here is old crop wheat. Soybeans. Oh, why didn't that change? CSEN 23. Hold on just a second. Get the charts right here. Okay, so here's old crop soybeans. What we have here is this big down move, but this is the 1 hour and the 4 hour chart, okay? And I want to pay attention to the wave counts. So on this decline that's happened here, remember in the corn chart we have a red 3 down here at the bottom. That implies more to come. With this A move, and now this morning we have a B wave here on the 4 hour. This would imply that we need a corrective rally somewhere to reset it so we can set it up to roll it over and go attack that $14 level. And this 5 wave is indicating that this move is also a little bit overextended and probably done, and we need 3 waves up in B in order to correct it. So we have an A, we should come down here and get a red B, and then we come up and get a red C and move this B over, and that's where you want to sell it. And ideally that would happen up into this range right in here, this 1425, 1430 range, which would also hold below our hedge line. So you're looking for a little move right up into this area, and then you want to sell it. So for us yesterday, this also red 13 was an indication of, okay, hit the pause button, don't chase anything, be patient, and wait for the setup that you want. Because when you're trying to catch an accelerating move, sometimes it's really hard to get in with a decent risk reward. So I think the market's going to give us that opportunity here in the next couple days, and we just want to keep our wits about us. And then here is Kansas City wheat. I want to show you this as well. Here's Kansas City. We had the same setup here yesterday where we have a 13 as well. Now on the shorter term stuff, it's actually more bearish than the other two because of these wave counts. Remember, we have an A, we have an A here and a B, we have a 5 and now a red A. That's a corrective structure, and wheat is now in a corrective 2 wave. There's probably a 4 of this setup, and then we should roll it over and get down on lower. So any kind of a bounce here, we're going to be buying in anything, closing any long positions that are out there, like short puts or whatever. So we're going to be exiting those as we roll it over. If we're lucky, we'll get a move back up to yesterday's high or into that 790 area and come test kind of the bottom of this shelf that got broken here. But that's not a guarantee at all that might happen. But that's kind of what we're looking for off of this setup. This red 3 right here is bearish. There's no question about that. And if we break this level here at 763 on a closing basis, then that opens up a move lower or longer term. To take this chart out a little bit further, you can see $8 was nice support. Now we're trading to the lower end of this range. When this range breaks from 764 all the way up to 1006, I would expect this move to move in equality to that whole setup. So you're talking about basically a $3 move from 8. is what we're saying. So you could see $5 wheat in the future if this thing really does decide to roll over, and that's something that we don't want to let escape us from this point here, right? So hey, we thought we might break out the top side of the range. We didn't. We immediately moved to the bottom, and now it looks like we're going to break out the bottom of this, and down we go. So we'll be patient, and I think it's all about corn, because the more likely, the more bearish corn gets, the more likely it is to drag everything else lower with it, and certainly the new crop contracts aren't bullish. Now, a word about the difference between speculating and hedging. Okay, when you are a speculative trader, today matters. The here and the now is what it's all about, right? Because you've got to be right now in order to make money. The difference between, so these short-term wave counts really matter to you if you are a speculative short-term person. If you are a hedger, someone that's dealing with risk longer term, then it's less important, and you can hit the pause button and say, hey, let's we don't need to catch a 15-cent rally. What we need to do is sell more or get more hedges on when it does, because we're not trying to be totally perfect in hedging. We're just trying to not get our heads ripped off, right? And so our long-term bias is bearish. We've been talking about that for a long time, so we've been recommending hedges be in place, and there's nothing on these charts that would suggest that we should stop that. We don't think lows are in place. We don't think that we're going to get a big sustainable rally from these levels. We think that we're going to go lower, and so leaving hedges on is good. To speculate, you got to be a little bit more precise, which means you've got to pay attention to the short-term substructure in order to do it really well. So that's the difference between these things, and why we're not pressing the short side speculatively on the because of the 13s. But as soon as we get a little bit of relief rally and we're holding below our hedge lines, then I think it's sayonara. We're going to break out the backside of these things, and down we go. All right, remember that's our opinion. Anything can happen, and price action will tell us what to do. There is risk trading futures and options, and you should only do so in light of your own financial condition, and be talking to people to analyze your risk and help you understand exactly what position you're in. That's Friday morning before the market closes. We'll see what the trade does today. And we're really looking for deliveries against the May contract to see what kind of delivery situation that creates. And if there are deliveries, that's going to be perceived as bearish to the market. And we're really paying attention to the corn market in that context. So deliveries are bearish. That's kind of the highlight. And we'll see what we get today, Monday, Tuesday, on that regard. Have a great day. We'll talk to you later.